All right, and we're live, everyone. Welcome back, Couch Investor here with a very special guest. The I would call him the semiconductor guru, if I may. Jose, you can find his channel. Link is in the description and also in the chat already. Jose, welcome on the channel.
Thank you for having me, and obviously super excited about the topic we have in store for today. I know you kind of sent me some few questions ahead of time, so I'm pretty excited what we're going to discuss today.
Awesome. I'm very excited as well. I think everybody is pretty interested in the semiconductor industry. Most of the viewers, I think, on my channel, your channel especially, are interested in semiconductors and own semiconductors companies as well. So before I ask you the first question here, I want to tell a little story about how I currently only own Intel, but I used to own your top two positions, which are Nvidia and AMD. And there is a lesson here to be learned, even if you make money. Now, I bought AMD at $22. I bought Nvidia at $175, which is $36, $38 after they split. I sold AMD at 64, sold Nvidia at now after post split prices $80 or so. So great returns,
Yep.
but of course could have been even greater. Now the only reason I sold was again it's a stupid mistake. I looked at my returns and I was like, okay, good enough, good enough. Now I have to sell. And there was no indications of the business doing badly, even when it dipped a little bit. I mean, the growth story was not over yet. And so my lesson here, I think the lesson can be learned here, even when you're up a lot. I think you're up a lot on AMD and Nvidia. I'm up a lot on Tesla. It's not a good reason to sell a stock just because you're up a lot, unless the business and management indicate that things are going to go into the wrong direction. With that said, my first question to you is when and why did you choose to invest in Nvidia and AMD, which are, for those that don't know, your top two positions?
Yeah. So I mean, at first, if we can just jump back to that previous story, I think it's crazy. Obviously, it didn't play out the right way, but I mean, we just came out of 2021, right, where all these stocks were like most of these businesses were still doing good, but obviously valuation was kind of crazy. So, I mean, I think that's still to the end of this day. I've been investing for I want to say almost a decade now, maybe more than a decade. I always forget how old I am. But it's like when to sell is still the hardest question for me as an investor. And I'm pretty sure if you ask investors the same question, um, in all different types of time experience, you might get the same response that, hey, at this time of age is still probably one of the hardest answers or to come up with.
Yeah,
Um,
no, I agree because I think we get uncomfortable when seeing our positions go up, 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 and up, and we're like maybe protective of the gains. But at the end of the day, I mean, the ultimate goal is to hold and never sell. Because
mhm,
if the business performs, there is really no reason to sell. But still, it's a psychological game with ourselves.
yeah. So now back to the main question there, Couch. I want to say AMD was probably one of my first positions that I've ever bought. And I, I wish I was some kind of like fortune teller. I think when I was just starting off my master's program in electrical engineering, and somehow I don't remember how, but one of when I was reading one of the books, I saw the company AMD. And I was just starting investing at the time, and I'm like, let me just look into AMD a little bit more. I remember my dad; he's always built computers, right? He's always built was a do it yourself. And sometimes he would use AMD parts, some other times he would use Intel parts. So I'm like, okay, I've heard of this company. I'm looking at it, and this was, I think, when 2016 or 2017, when Lisa Su was kind of just really starting to turn things around there. The first generation of their consumer product, the Ryzen, still hadn't been released. But I listened to Lisa Su talk, and she said that one of her major plans was to kind of eliminate the debt that AMD had. And I'm like, I like what she's saying. Curious about this first generation CPU that they're about to come out with the Ryzen. This is going to turn things around. So I got lucky and I purchased, right? There was nothing else that, hey, I liked what Lisa Su was saying in forms of debt management, and I'm also liking that, hey, they're going to release this new kind of Ryzen CPU, where right now it's pretty much dominated by Intel. And luckily for me, I think that was my first, what I always call AMD, my first golden goose. I got into AMD in the single digits, luckily. Unfortunately, at the time, Couch, I was just starting college, right? Master's college. I didn't really have that money, but throughout then, it has become my number two position. I don't think I've added much to AMD throughout the times. Maybe in the 20s, in the 30s, but overall it was very low and it has become number two. Nvidia, on the other hand, I think I added that one around 2018. Um, I can't calculate post split price. But what I was really excited about Nvidia was just the overall kind of transformation of the GPU into data center market, and that data center market was something that, when people hear about it now, they think it's something that's been here for multi decades. But the data center market is fairly new, especially for semiconductor companies. I mean, the first generation AMD EPIC came out in the late 20 teens. So it's definitely been a very new market. And I was pretty excited about the data center space. I was really excited about what NVIDIA was doing with things like robotics and so on and so forth with the GPUs. And that's why I decided to add onto NVIDIA. But I think in pure performance gains, AMD was probably still is my best performing stock, but Nvidia has just been. I was at a different time, obviously still very early on in investing, so not a lot of money at the time, but it was a lot more than AMD. So that's how it has risen to become my number one position in my overall portfolio.
Okay, fair enough. Good intro into your top two position. I think, yeah, 2018 is when I saw the same opportunity. It's after that first big crypto boom. So
Mhm.
Nvidia stock crashed because, well, crypto miners, no interest anymore, etc., etc. We saw, I think it was a 40% crash or something like that. So yeah, okay, that was a good period to buy. When you bought it, did you have any I mean, did you know what was going to play out in the next, let's say, 3 to 4 years? Were you focused on purely just data centers, or were you also looking at automotive, professional visualization, and of course, data centers as well? Or is there something else you were focusing on with regards to NVIDIA?
So starting off with Nvidia, I think I was mainly focused on the data center side. Obviously, they were dominating the consumer side, but I didn't know how big eventually the consumer can get. Right? I mean, they've been dominating the GPU side for decades, but that data center side was a huge opportunity. And as an engine, I want to say, luckily, with that engineer and that little bit of education background I had there, I kind of saw a little future in the robotics market. And at the time, that was still kind of very minuscule, and still is very minuscule part of NVIDIA's revenue. But I do believe that's a huge growth opportunity that NVIDIA has. So I was looking mainly at the data center space, but just the overall kind of semiconductor market in theory. I really like how it's a cyclicality to some extent, because it does create a lot of buying opportunities. And as a semiconductor investors, as a semiconductor investor, I really do enjoy that cyclicality, because that's when I think the best buying opportunities come in this space.
No, I agree. I think especially with semiconductors, there is obviously cycles. I mean, there are cycles in many other industries, but with semiconductors, I think we can see that cycle happening. I mean, we've seen that a year and a half ago, especially with the likes of Nvidia. But then when the cycle restarts, or in this case, it's not even a restart, it's to the moon in just one quarter guidance. That was just incredible. Things switch quite quickly. But I mean, there's another. We're going to talk about that company a bit later on. ASML, they're also in a cycle, but luckily for them, they have a backlog of 36, 38 billion euros. So even in a down cycle, they're still working through what happens in the previous up cycle. Now, I want to switch a bit towards the ugly duckling in the trio family, which is the stock I own, which is the semiconductor player that I own, which is Intel. Now, I own Intel because I believed in the comeback story that Pat sold to investors. Now, I knew fully well that this is going to take a couple of years' time. Now, my question is for someone that is interested in the semiconductor industry, that has been in it for quite a while. Were you surprised at how fast Intel went down and they lost complete control of a market that they were completely dominating for, years, decades, even, shall I say.
Eh, So this one was an interesting question when you first sent this over, Couch. Like when we look back at it, right? It looks like it was fast, right? But I want to say it definitely took a few years. I mean, AMD released their first generation EPIC in 2018, 2019, and it took them about 4 to 5 years to even get to like the 20, 30% market share. So this is one thing that I really do enjoy about the semiconductor space is while things you might think that, hey, look, this new chip is going to be a huge turnaround story for a company. It takes multiple iterations and generations before it kind of before it really shows its true colors. So it kind of really while it now it looks pretty fast that it happened. I want to say it definitely took some time, and AMD definitely had to continue with its iterations, and that's why I think I might be jumping the gun here, Neil, with the the next question. That's why when Pat actually showed up to Intel, it made me a little bit more excited about the stock, even though I wasn't an owner, but I knew that there was time, and even Pat mentioned it. I think when he first started, he said, "Hey, look, right now we're burning, we're bleeding on market share here in the data center market." But I don't know if he said I promise you, but pretty much he in the way he was saying, hey, look, I promise you when our next generations come, they're going to be better and better. Unfortunately, the design process is starting now. From it to go from design process to an actual chip, and then from that actual chip for our consumers to even like it, and then for the next iterations to go, that's going to take about 3 to 4 years, and that's pretty much what happened. I think that started in 2020 or 2021, if I remember correctly, and it's not until now where in this most recent quarter they mentioned that, hey, look, we're still bleeding, but it was a lot slower than we previously anticipated. So it took about 3 years for that to kind of stop. And now maybe we're going to start to see maybe their next chips could either continue to stop the bleeding or maybe they pull back some market share. But what really gets me excited is that, hey, it's very sticky when these companies have this market share hold, and you really need to show up to say, hey, look, you got to stop using Intel and focus on AMD. And that's why, Neo, if I may jump, this gets me really excited about Nvidia. Obviously, AMD and Intel have their own AI accelerators, and everybody's thinking, hey, look, when AMD, when they're ramping right now, but when they really go in full ramp production of the MI300X, it's going to go to the moon. While they definitely have the opportunity to take market share, I feel like it's going to be very similar to that AMD Intel story where, yeah, they might start to take a little bit of market share here, but it's not going to be as fast as maybe some investors are anticipating. Because I want to say it takes time for companies to change technology. So I'm gonna see, is my thesis correct? Is this kind of AMD versus Nvidia going to be very similar to that AMD versus Intel story?
Yeah, and with GPUs taking more and more workloads from CPUs, Jensen Huang has been announcing this since 2011, but we are starting to see that more and more with more AI PC computers. I think we're going to see a lot of change in the second half of this decade, because I do think when Pat came in, he himself said it's going to take a couple of years for us to actually move this whole ship around, even though he promised 5 in 4. So even the 5, because the last 2 years, fine, we get new products out there. Consumers are like, okay, we're seeing some improvement, but we're not really that excited. We're excited for not what's coming up 2024, 2025, and then moving forward. But Intel does have a huge component in my thesis, which is the foundry business, which is probably something that before didn't really make that much sense for a lot of investors. But moving forward, I think we're going to get, that's just my expectations. And I think they're focusing on that as well, working with ARM here and there. These are already a couple of indications of what we might expect in the future. The foundry business might become a huge component of Intel. But on the flip side, I've already been seeing some analysts indicating that if foundry becomes successful, very, very successful, it cannot become the biggest one out there while still being under Intel's ownership. It would have to be divested in order to attract the other big competitors out there, because maybe there might be some conflict of interest. What do you think?
So I don't think that's necessarily true. I feel like I'm not sure where I've read it. It's been in a fire chat. I think it was Pat that mentioned it, or one of his management team, that even though Intel, AMD, and Nvidia are all competitors to some extent, they do to some extent share roadmaps that, hey, look, I'm going to generate, for example, the GPU and CPUs, they need to be kind of working on the same type of platforms, maybe on same type of motherboard solutions. So they do already share a lot of secrets amongst each other. And I think it was Pat that mentioned that, hey, look, while we are competitors to Intel, to Nvidia and AMD, there's times when we get into rooms and we discuss, hey, future products. So we understand that, hey, we're going around the same direction. So I don't think Intel's foundry business needs to completely be a spin-off. I really do like what Pat is doing right now, how within it's already an Intel business, but it's kind of two businesses together. I also believe that's going to help out with their overall margins and kind of change the overall world culture. And Intel's foundry business, right? They did announce in their most recent earnings that by this year, at the end of this year, they wanted to have one customer for either their 18A or their 20A. I forget which one it was, but they already have three, and they were already working on one more by the end of this year that they think they'll have. So it does seem like, hey, their foundry business is going to be moving in the right direction. And they even mentioned that one of those big customers really deals with high performance computing. There's only a limited amount of customers that could be there. Obviously, it could be a big tech giant that's kind of focusing on their own ASIC solution. But I don't believe this company has to. It might, but I don't think it has to attract its competitors to come to its foundry business, because I do believe there's a lot of ways that they are able to protect the information from competitors. But yeah, the foundry business is what gets me excited. I mean, this company is worth what, I think $200 billion right now. AMD doesn't have the foundry business in theory, and again, AMD is my number two position. Nowhere near the revenue. Doesn't have the foundry business aspect either. TSMC is valued at over $500 billion. So I definitely see how that could be a big play right now, especially as governments all around the world are pretty much giving free money to some extent for companies to build out fabs. We have Intel building in Arizona, expanding in Ohio, in Europe, and the list goes on and on. So definitely a great time for them to really start to build out and expand in this foundry business, in my opinion.
No, I agree. I agree. When I heard that analyst say, I don't know exactly who he was, but I said, look, it's in Intel's interest actually to build out the best foundry business that they can. I mean, it's not really in their interest to start trying to make their own chips the best one. Of course, they'll do that as well. But to be able to attract more and more customers, and the big ones as well, which again, we're still waiting for that name. They're keeping that a secret for quite a while. For them to be able to do both of them, they have to be the best of the best out there. It cannot be, oh, we are Intel, so we're going to prioritize our own chips and then look at our clients. That's just not going to work. And I do think that the foundry business, in my opinion, will stay inside of Intel, and then of course that will help with free cash flow, profitability, etc., etc. I mean, we've seen what TSMC has done throughout the years. Truly remarkable. Now, before we jump back to a question about Nvidia, more on the, let's say, negative side of things, not really negative, but looking at the risky side of things, are you surprised at everything that Intel has been achieving under Pat's comeback? And do you think that it will work out eventually, going back to that leadership position with leadership products, as he always says, each and every time he gets the opportunity to go on screen? Because that's one thing that I like with him that I didn't like with the previous management, is that he's very transparent. I mean, he says the things that investors want to hear, and yes, they did take a hit when it comes to profitability, but these are things that needed to happen in order to, I mean, it's still Chipzilla, it's still Intel. It needed to happen, but I'm happy that he's very transparent.
Definitely. I mean, I really do. enjoy the Foundry side. And the Foundry side, I think, was probably for me the biggest risk for this company. I mean, obviously, Foundry is expensive, billions of dollars on semiconductor equipment, billions of dollars on just the fab itself. So this is definitely an expensive, even with subsidies from the governments. It's a very expensive business. But right now, I'm more surprised that this company hasn't seen as much delays on their nodes as old Intel used to be. I feel like old Intel really was known for delays. So I think that was what really surprised me. And if they continue, I mean, they're saying that hey, these 5 nodes in 4 years is it's pretty much game over already. It's done. We just need to really see more on that 20A and that 18A, but we're already hearing a lot of bullish trend on both of them versus competitors. I'm more surprised on the Foundry side. On the kind of consumer, on the GPU and not GPU, on the processor side, that one I'm not too. I wasn't I wasn't I didn't think they were gonna go to zero on that. I mean, they had huge billions of dollars on research and development. I think eventually they were gonna pick back up. The only thing is AMD is not lighting up either. So AMD, in my opinion, is going to continue to push the pedal to the metal with investing in research and development. And I think now with them seeing Intel really kind of turning things around, it's just going to push them even more. So now it's just going to be a talent race to some extent to see who has the best talent for the upcoming years. So to me, the Foundry side was the most risk, and a lot of that has been eliminated. And I do believe that's why the stock has really seen a nice turnaround story, especially with those customers. So I think Pat can definitely turn things around, but I'm still rooting for my number 2 position here, AMD.
Yeah, fair enough. Did not expect anything else. But yeah, I think it's going to be. I think it's going to be interesting. And the big winners here are definitely going to be the consumers, whether it's us, the small guys, or the companies using their chips and services, because the more competition, the better pricing. Now, you did mention a little bit GPUs. Of course, Intel, they've launched some GPUs, not that big of a deal right now. But from what I've been hearing around, they're not that bad. It adds a pretty good component to the market at a pretty attractive price. Do you see them, since GPUs are going, I mean, we're going to see more and more GPUs in the years to come, use of GPUs as well. Do you see them stepping up their games in the GPU market, or do you see them just as a niche player and that's about it?
If we talk about it in the consumer space, I would say yes. A couch is more like a small opportunity for them. In the data center side, no. I think in the center side, they have huge opportunity here. And I mean, their Gaudi too, which is not necessarily a GPU, it's just more of an AI accelerator, is doing amazing. I mean, they got that huge supercomputer win from Stability AI. And Stability AI is a huge AI company. So not even and again, AMD is my number 2 position. Not even AMD has gotten a huge AI supercomputer win like that for their accelerator. So Gaudi 2 is doing pretty good. We're expected to get Gaudi 3 in later this year in 2024. So I think their AI accelerator has huge market opportunity for them. Outside of that, I do believe next year is when they release Falcon Shores, which is going to finally be their true GPU, which is going to be the mixture of this AI accelerator and the mixture of the GPU. Ponte, I forget their current GPU, the Ponte V.
Yeah, Ponte Vecchio, I think. Yeah.
Yeah, that one I'm not too happy about. I'm not too sure how that one's doing. Gaudi's doing great. I do believe there's huge opportunity for them in Falcon Shore. So for their AI accelerators and GPU in the data center market, I do believe there's big opportunity. For the consumer side, I think they just want to find other niches to kind of grow into. So if I was an investor, I would be more excited about Falcon Shore and Gaudi 3 for sure.
Yeah, no, fair enough. I think the big bucks are in that segment as well. Moving back a bit to Nvidia. Now, I do want to show the viewers and yourself actually something with regards to Nvidia. I don't know if you can see this very well, but basically it shows you the comparisons in valuation between AMD, Nvidia, and Intel. And I'm sure you've seen this before. I know you've talked about this. Despite Nvidia being up 203% year over year, it is still trading at quite a an attractive forward PE right now at 28.1 times. I mean, AMD is the most expensive one here of the bunch. Then you have, depending on what metric you're looking at, Nvidia and Intel, but of course, Nvidia growing extremely fast. Now, my question here is more on, let's say, the bearish side of things, because I've been hearing a lot about the fact that Nvidia might have reached a local peak, meaning the market will still grow and they will still grow. So in dollar terms, they'll grow and they'll do fine. But seeing all the other big tech companies, Amazon, Google, Microsoft, etc., also entering, I mean, chip designs, stuff like that, them probably not being extremely happy paying a huge premium on Nvidia products. Do you see that as a sort of threat for the future of Nvidia? Still, Nvidia will do well, but growth rates wise, do you see this as an issue?
Hmm. In forms of big tech entering this market, I don't see that as a risk, and I'll jump back into that, Couch. For me, the biggest risk here is how fast or how slow AI workloads or AI accelerated workloads continue to expand. And I think that to me is the biggest risk. If we start to see for some reason AI workloads or AI development slow down, then obviously that's a big red flag, because a lot of these expectations or next trailing 12 months are all based on analyst expectations. And if that slows down, obviously they're going to reduce those expectations. So I think that's the biggest risk. And here in the semiconductor space, Neil, this is what I feel is going to happen. Maybe not next year, maybe not this year either, but there's going to be a time when there's over inventory correction with these data center GPUs. And when that happens, it's going to be either 2-3 quarters of slowdown, and we're going to see massive declines in companies, especially Nvidia, which has kind of pulled up a nice amount. So that to me is going to be the great time to buy companies like Nvidia. So I don't think this AI market is going to go anywhere. I don't think it's going to grow at a steady rate, and we're going to have to watch out for those over inventory corrections that might happen within a year or two. The other thing I wanted to mention there, Neil, is that looking at that chart, we see AMD being the most expensive with 44. I think it was 44, while the other ones were in high 20s. Again, this is all based on analyst expectations, and I do believe analysts might be underestimating how much AMD can grow in the GPU market. So I do believe everybody's kind of capping AMD's revenue at $2 billion, but in a lot of conference calls that AMD's CFOs and CTOs at CTO have been, they mentioned that they have capacity for over 2 billion still in inventory. They already worked on that inventory for even over 2 billion, and we've seen reports that they're even trying to go out there to find a bit more capacity to grow. So I do believe there's more opportunity there. And well, maybe even with those true values, it might not be as cheap as Nvidia or Intel. I don't think it's as expensive as these numbers look. I think just analysts are underestimating it a bit. Um, Now, um, with Nvidia, I mean, the thing is, we've seen also orders that even to this day, a lot of the back orders are still 50 plus weeks in backlog. So that still gives the company a lot of foresight of, hey, this market, at least for the next year, is still pretty heavy and pretty strong.
Okay, fair enough. Yes, I mean, there was last week the deal with that Indian company, which is now,
Yoda,
I
I
mean,
think, I believe.
yeah, I mean, the overall deal is $1 billion or so. So quite well. And I think, yeah, with AMD, we might or we might not be in a type of scenario with what we've seen with Nvidia before they guided for that huge quarter. Because yes, I mean, I believe it was mentioned during the earnings call, $2 billion just from the AI side, and that's the focus right now. Now, of course, analysts don't want to be that wrong, so they focus on that. And then if it's a bit higher, they'll be okay, great, more upside for us. But yeah, we might see that multiple compress if, of course, the results are much better than expected. Um, with how should I say it? With everything that, I mean, you've probably seen a lot of announcements that have been made at CS more recently. With regards to the semi space, especially Nvidia, talking about automotive there, is there something that has piqued your interest more recently?
In forms of semiconductor and CES, I don't know if it's CES in theory, but I think right now in the overall semiconductor space, um, like I think I mentioned at the beginning, I think for semiconductor companies, the best time to get into these companies is when the over inventory corrections are just starting. And I think that's what's happening right now in the automotive space. We've seen a lot of companies. We've seen Mobileye, which used to be which is majority owned by Intel, report on January 4th, I believe, that their customers saw huge are seeing excess amount of inventory. That for this full year, they're not going to grow as much. I think it's actually going to be a revenue decline in this next 12 months compared to the previous years. We've also heard from another company that I was just researching, Air Test System, which does a lot of test solutions, creates test equipment for things like silicon carbide, which obviously is still in the EV market, seeing the same thing. So I think right now my main attention is in the semiconductor space that deals with the automotive solution, because normally what ends up happening here, Neil, is like, hey, we start to see these over inventory corrections. Stock prices drop dramatically. I think Mobileye dropped over 25%. Air Test System is down over 66% from its 52-week high. And obviously,
I think we have lost Jose here. Let me check with him. Ah, I think I lost you there for a second.
Neil, sorry, I think I might have gone down.
Yeah,
Am I
now
back?
you're back. Now you're back.
All right. So I think right now what's going to happen in the automotive cycle is we might get even a few more quarters of weakness. But I do believe those stocks in the automotive space are what's looking pretty attractive because in the long term, autonomous driving is coming. A lot of these solutions can be used in like mobility robotics as well, and other types of robotics used in things like industrial market, your typical consumer market. So right now, while AI is definitely the one seeing the big bulk of gains, I think investors should really keep an eye on companies that are dealing in the automotive space because of the weakness we're seeing.
Yeah, I mean, Nvidia themselves, they have there was Nvidia Drive Orin. Next up, Nvidia Drive Tor already announced a couple of partnerships with some Chinese companies. So yeah, it's going to be interesting. It's definitely a segment that will grow throughout the years as automotive driving mobility becomes bigger and bigger, regulated, approved. Overall, I think that can be a big growth driver. Now, I want to switch because there's already one guy that asked about another semiconductor company. Before, that's not a under the radar one, by the way, but are there any under the radar semiconductors that you have been looking at that people might not be that familiar with?
Definitely, there's a few, and they actually deal with the semiconductor equipment side. Um, So I do believe right now investors should keep an eye on two things. First, automotive companies, because they're seeing that weakness right now. But the second is semiconductor equipment manufacturing companies, but not your typical players like ASML, like Lam Research, like AMAT. There's a nice amount of companies that are within $10 billion or less. A few of them are Onto Innovation. Another one is Nova, which is ticker NVMI. Another one that I follow is BE Semiconductor, which is Bessie. That one's one that's international, unfortunately. And I believe there's another one that I have that I'm keeping an eye on, Camtech. And these four players, Neil, are under $10 billion in valuation right now. And these are stocks that are dealing one way or another with either metrology, which is the inspection of of semiconductor solutions, but more important with the inspection as chips are getting smaller, and also with these things like advanced packaging, thermal compression bonding, and a lot of solutions that are needed to build AI chips and to build advanced chips right now. So these are the ones I'm keeping my eye out. I do have, just for disclosure, I do have a position in Bessie and Nova. I do not have a position in Onto or Camtech, but all of those are ones that really focused in the semiconductor equipment space. And in my opinion, because of this shift in chiplet design, this change in kind of 3D stacking that we're seeing from companies like Nvidia, like AMD, with this kind of monolithic approach where you're putting so much chips together. Those are the ones that are going to be good winners and definitely have the probability of producing some great gains compared to your traditional semiconductor equipment companies. At the end of the day, these are more like your growth style stocks where they come with a little bit more risk compared to your more mature plays as well.
Yeah, no, fair enough. And now to answer maybe the viewer's question before he leaves, what about global foundries? Of course, a big player worldwide. Um, if you can maybe educate us a bit about that company in a
So
nutshell, maybe.
Global Foundries is another manufacturing player. Unfortunately, not unfortunately, Global Foundries doesn't really focus on your advanced chips. I think they stopped at maybe, I forget what was their last, like 10 nanometer, maybe. I'm not too sure where was their last size chips, but they focus more on like the bigger size chips that go on things like aerospace and defense. Global Foundries, not one I keep an eye out for right now, but obviously with subsidies, I do believe all companies in this space definitely have a huge market opportunity. The other thing is Global Foundries is mainly based here in the United States, so they do get a lot of contracts from the government to some extent, and a lot of grants from there. I know they're also focusing a lot in things like silicon optics, which is definitely a growing market right now in the semiconductor space. But it's not one I follow too much, Neil, to give any other thoughts outside of that. Definitely want to keep an eye out for, but not one I can share too much information in.
Okay, fair enough. I think this name right here, Qualcomm, is maybe a name that we're a bit more familiar with, and I think it's one of those companies, one of those semiconductor companies that does not get that much as much love as the other ones. And to be honest, I don't know why, because it's a pretty big player worldwide. Handheld devices, AI chips, automotive as well. I mean, whether or not VR AR picks up and becomes mainstream, I don't know, but currently I think so. I think we're going to see a lot more of those things, and Qualcomm is a huge player there. Um, so yeah, let's talk a bit about Qualcomm.
See, now Qualcomm is one I ooh on and I always forget. When you should have mentioned when you mentioned kind of an underseen stock, I think Qualcomm is definitely one of them. Qualcomm, unfortunately, right now, most of its revenue comes from the mobile market, right? So obviously they're seen more as a phone company, but they continue to kind of innovate new things. They're really focused in Internet of Things, like you mentioned, things like VR and headsets. They've got good partnership with Meta platforms for their Oculus 2, Oculus 3, for their Ray-Ban glasses with their AR Gen 1 platform as well. They just announced also a pretty cool partnership with Samsung and Google with those same chips as well. So they do have that opportunity in IoT. The other thing is this is one of the big players, in my opinion, that really brought AI to local devices. And this is something that Qualcomm has been talking about for a while, that their kind of solutions are really meant to bring this hybrid AI style. And if I may say, I think Qualcomm was one of the first to really start mentioning that hybrid AI workload, where some AI is going to be done locally on your device and others going to be done in the cloud. So Qualcomm, I think, is doing really great there. The other thing is they just announced their Snapdragon X Elite series, which is going to be that PC consumer CPU. Um, Platform. And based on the benchmarks that they gave us on their Qualcomm event, that's going to be a crazy CPU, compared to even Apple's chips and even to Intel's chips or AMD's chips. So it's one that I believe has numerous growth opportunities from not just the mobile space, but the PC market, the IoT, robotics, and they definitely have a huge amount of pipeline in the automotive market. So I do own Qualcomm, and I am bullish on that one right now based on all the opportunities that I just mentioned.
Yeah, no, I mean, I always look at Qualcomm. I looked at it at 110, and I was like, okay, looks pretty good, but unfortunately, I went with another trade, which is PayPal, which might be working out in the future. I don't know. I mean, my entry price is $57 at 60 right now. Could have been worse, but now Qualcomm, if I will be looking to buy another semiconductor chip, it's probably going to be Qualcomm because of the mix of pretty good valuation wise, and the upside, the product itself, the product roadmap looks extremely well. So that's definitely one, and I believe it pays a dividend, right? It has a small
Yep, it
dividend,
definitely does have a nice dividend.
2.28%
Hmm.
yield. So I mean, it's definitely one that flies under the radar and that deserves a bit more love. Um, Now, since that's also in your portfolio, are there any other what? How does your top five look like? I mean, we have one and two
Uh,
Nvidia,
yeah,
AMD.
let me
What's
just pull it
next?
up real quick, just so I'm not making things up here. Give me one quick second.
No problemo.
Fidelity. Let's see. I know one of them is gonna be one of the cloud giants, I believe. Let me just log in. Phone is working extra slow today.
You don't have the new Snapdragon.
No new Snapdragon. For all the nonsense I give Apple, I actually have an iPhone, but something so
uh,
old, it just doesn't give me.
yeah, they
See,
slowed it down because they want you to buy a new
they,
one.
they want me to upgrade to the new one.
Yeah, we could have done this in VR or AR. I'm getting the Quest 3 and the Ray-Ban glasses tomorrow. I'm gonna try out, do some due diligence.
Hold on, Neil. Let me just log in here. Might be
No
faster.
problem.
But I do believe number three was gonna have to be Microsoft in my portfolio. Um, I do mainly focus, Neil, on just the tech market, and within the tech market,
Mhm.
it's more of just the hold on. Let's see. Why don't you want
The
to open?
giants.
Yeah. One of my clouding giants that I actually am very excited about right now, Neil, is Oracle, which doesn't get
Hmm.
too much love. And the main
Yes.
reason is this is one that's expanding dramatically with their data centers. I believe they mentioned that they're building expanding or building over 100 more data centers in the upcoming quarters. Another thing that gets me excited about them is they get, I feel like they always partner up pretty well with Nvidia. All right, so here I have. So number one is Nvidia. Number two is AMD. Number three is Microsoft. Number four is Meta Platforms, and number
Hmm.
five is CrowdStrike. Um, number
Okay, the
six,
cyber.
yeah, number six is the S&P 500. So those are my top six holdings right now.
Okay. Interesting. Before I ask my question, Juan here has, does ACM research fall in the
Research.
category of component supply?
ACM research, not one I follow. Um, I
Me
follow
neither.
too much. It seems to be ticker ACMR. It does seem like they're world class equipment manufacturer serving IC. Um, so it seems integrated. Yeah, not one I follow. It definitely seems like they do feel in that semiconductor equipment market. But not one I'm too familiar on. This one's definitely pretty niche to some extent.
Yeah, I mean, if I look at the expected growth here for sales, looks pretty good. I mean, close to 30% sales for a growth in sales in 2024. I mean, we've seen increase across the board, top and bottom line. Could be interesting, but yeah, we're not that familiar with that.
Yep.
But yeah, coming back to Oracle, because this is something I've been looking at as well. We're all talking about, of course, Amazon Web Services, Microsoft, Google Cloud. Even though we've seen a bit of a slowdown, but I still think Google Cloud is going to be quite big. But Oracle is, I mean, I've seen people say Oracle is the IBM. I'm like,
Mhm.
yeah, I don't think so. Maybe it's a bit too underloved. Yeah, if you mind sharing a bit more, I mean, you probably looked at Oracle already.
Yeah.
But
S- So Oracle is actually one of my stocks that I really want to build a position here in 2024. I want this one to become one of my top 5 positions. And the
Hmm.
reason that I get really excited about Oracle is we've seen the huge expansion in their data center market. And this is one that is really growing. And I do believe right now, with AI workloads being so demanding, they're definitely going to be able to grab market share. Unfortunately, if you look at their most recent quarter year-over-year revenue growth, it was like 5%, opposed to like maybe your Microsoft that's growing, I want to say even in the double digits
Hmm.
still. I do believe that's going to change as we continue to see Oracle expand in those data center solutions. The other great thing is they do have a lot of software solution, and a lot of that software solution is actually going to help them push into their cloud. They're going to go to their customers and say, hey, look, I know you've been looking for clouding solutions for our software side. Here we're kind of expanding into your region. Let's go into there. And like I mentioned, Oracle is focusing a lot of money with AI accelerators. They're getting CPUs from AMD. They're also focusing with Ampere as well. And like I said, I focus so much, Neo, on Nvidia that every time I see Nvidia announce either something new, like their Bluefield 4 DPU, one of the persons that I always see first on the list is Oracle. And I do believe that right now, Oracle, because they're such a small player, they go to NVIDIA and they were actually the first players to announce NVIDIA's DGX Cloud, which is somewhat of a competition to the clouding market. Oracle, that was the first one to say yes. Then was Microsoft and Google. And finally, Amazon ended up going with it as well. But I think right now, Oracle and NVIDIA are partnering up so well that because of that partnership, they're going to get a nice amount of AI accelerators. They're going to get a nice amount of hardware to really build out those AI, those infrastructure solutions, and they're going to be able to take the market share from these players here.
Yeah, I mean, when you look at the company, it has been growing under the radar, let's say. Yes, valuation wise, I've just looked, it's a bit more expensive than its 5-year mean. But then again, if you see the accelerated growth happening in the coming quarter, that multiple suddenly goes down much faster. And who knows, maybe Larry Ellison, Elon Musk, Tesla, they might be working together on some partnerships. We never know. We never know. But yeah, Oracle definitely something to keep an eye on for those that are interested in having another cloud player that is not one of the big guys out there, even though Oracle is still pretty big. Um, I want to ask you about maybe a broader question. Where do you see the market go in 2024, and what are some of the, let's say, biggest changes you think will happen in the second half of this decade?
Neil, for me as an investor, it's so weird. I don't really follow much of the overall market. I'm hoping it's going to be a bullish year, but to be honest, I don't follow too much um, with a lot of the economics happening here. So not much I can share there. If I can just share about the semiconductor space, I do believe we're going to continue to see a nice bullish trend here in the consumer goods. We're just starting off, right? Everybody thinks that, hey, look, we're at the top here of the consumer market. But no, laptops and all these consumer goods are just finally starting to turn around into the positive trend. So we can continue to see a nice bullish market here. Unfortunately, the only thing that can really hold it down is, hey, if consumer spending starts to slow down via some things like maybe like we start to see more higher interest rates, if we start to see more pressure on the consumer side, one way or another, either being recession or something, that's the only thing, in my opinion, that can really kind of slow down this kind of bullish trend that we're going to be seeing in the consumer side. Um, uh, to me, the AI market, the data center market, are going to continue to see huge churns here in 2024, mainly because of supply constraint issues. But things are going to get better. And the other thing I just expect is I expect that something weird is going to happen that's going to give us buying opportunities for a lot of these companies as well.
Yeah, okay. I mean, something weird. We've been having weird things since 2020. I mean, it's been 4 years of getting something weird every couple of months now. So of course, opportunities will definitely arise in the coming years. Um, you mentioned, actually, almost forgot about that. You mentioned that Meta sits in your top five. I didn't know that Meta is also in my top five as well. Um, Why? Why is it in your top 5?
I wouldn't say, Neil, I haven't bought Meta in a long time. My biggest addition to Meta was a few years ago when Meta was getting that pressure from the advertisement side, and we were seeing some weakness there. Everything that I usually invest in, Neil, usually comes back to the semiconductor market one way or another. What really got me excited about Meta is their metaverse to some extent. And when you talked about their metaverse, a lot of people were just seeing virtual reality, and that's all they were seeing. But behind it, Mark was always talking about AI hardware, AI accelerator, building these data center infrastructures to be able to train that algorithm to be able to do better things. And now we're seeing that kind of turned out really well for them, with them kind of being able to take market share, doing great things with those AI solutions. So for me, one of my biggest opportunities was when Meta saw that kind of decline, and I personally see Meta as more than just a advertisement player. They're definitely a big tech player. They just announced a few ASIC solutions themselves. The MTAI, I believe, was one of them. And again, a huge engineering company. I think they were overvalued. Right now, I haven't touched Meta, so I'm not planning on adding any anytime soon. But I what I saw was AI data center build out, and I did think that was going to pay out for them, and luckily for me, it did.
Yeah, no, I mean, Meta, of course, right now the majority of its money, revenues, does come from advertising. But if you look at the amount of R&D spending on AI infrastructure, on chips, etc., etc., I mean, I believe it's the number one in R&D spending for those types of things. Um, so yeah, they're definitely building something that's way past just scrolling through your Instagram feed. Of course, it helps the algorithm, but
Pretty funny, Couch. I think it was on 2022. Meta actually spent more on AI infrastructure than Amazon did. It was number three, opposed to many might have thought that Amazon would have spent more money in AI server infrastructure. So Meta is definitely a big player there, and I'm really excited. They're also one that provides a lot of AI solutions. I'm really focused in the AI market, and they constantly release some form of models and some form
yeah,
of
with Llama.
open source, yeah, Llama. But outside of that, even just things like 3D imaging, schematic polling, and stuff like that. So they're definitely pushing a great weight here. Um, but like I mentioned, I don't think I'm keeping it. It is my top position, but I'm personally not adding any right now. And Neil, I'm curious. What are your top five that you have? And I just want to learn from you. What are some that you're keeping a really close eye out here for 2024?
So my top 5, the top 2 already makes up close to 50% of the portfolio. So it's number 1 Tesla, then Amazon, Mercado Libre, Meta, and then for the 50 depends really on the dates. Sometimes Palantir, sometimes it's a trade desk, sometimes it's Airbnb, depending on the stock's movement. But yeah, Amazon, Tesla is the top 2. That makes up, yeah, close to 50%. Then Meta and Melly. I doubled down on Meta when it was, I think, 90 something dollars. Didn't make any sense. But I also do believe that they are building something way past just being the social media company, with everything that's been going on there. All the applications that can be done with AI, they can be the infrastructure in the background. But for this year specifically, yeah, I mean, they are trading at 22 times earnings, which is really not that expensive. Um, I'm not currently going to add to Meta. Right now, I have my short-term bets, let's say, with Robinhood and PayPal. I've got pretty good entries there. And I'm saying short-term trades, short-term not meaning a week. I mean, this year could be a make or break. With PayPal, I'm still looking for a quarter or two of getting some answers. But I mean, lots of people have talked about PayPal before, myself included. But yeah, this year, if I see some big improvements already in the next quarter plus guidance, I think that thing could go up extremely high. What I'm looking at very closely right now is to see whether or not Tesla will drop below $200. If so, despite it being my largest position by far, I would be adding. I think we are really in a time where people are still thinking Tesla just sell cars. Of course, 80% of its revenue comes from selling cars. I know, but AWS, Amazon also made their money before by selling books and then more stuff and more stuff, and now the majority of their profits come from something that didn't exist before, which is from the cloud. And I do think that we're going to see a lot of changes with Tesla, whether it's the energy side of things, FSD. Although I've been saying it for years, I think FSD will take longer than what most are expecting. And for now, I'm correct on that. I think the robot, I give it a 1 or 2% chance at first, the first time they presented it. Every new clip that gets put out there is just mind blowing. What they are doing, I think that will be, again, it's not something that will happen in a year or two. I'm talking end of the decade, next decade, things will change quite dramatically for Tesla, and they're entering markets that are worth hundreds of billions of dollars, if not more. And so, despite this company being worth over 600, maybe close to 700 billion dollars, I still think we're quite early. So that's one of the stocks I'm looking at very, very closely to add. If Palantir drops below 15, fine, I will add as well. But other than that, currently I'm letting my short-term trades work out. If they work out, I will have a lot of cash on hand. We'll see what we'll do with that. But yeah, closely looking to that. I know that this year can be a volatile year. Elections also in the United States, conflicts around the world. So who knows what might happen? But I mean, we've had that countless times in the last years, decades, and eventually, if you zoom out, the markets, good companies always perform and go up. So in short and long, that's the answer.
I mean, Niels, Tesla is one I barely have, but it's one I do keep an eye out. And like you mentioned, this is one that I'm I always turn back, no matter what. You're gonna see. I always turn it back to the semiconductor side. Their Dojo chip, their Dojo supercomputer, like that excites me for it. And maybe one that I want to start adding more. And I agree with you. A lot of this is the data that they have in my mind, the data that they get from autonomous, so from their vehicles, they can easily project that into other types of mobility. One of that mobility can easily be the robotics things, and I do believe that's why they are accelerating that robotic side at a lot much faster than maybe some other players. Because to some extent, the way a car moves is going to be somewhat like a robot moves. Hey, I can't hit this person. I got to move from this thing away from here. I got to understand that how to get around this right here. And I do believe the expertise that they have with that data in the card side can somewhat translate to the up to robotic side, and that's definitely a huge opportunity. And they're doing really well with that supercomputer. That every time earnings call, that's the only real thing I want to listen to.
Yeah, no, I mean, it's true. At the end of the day, cars are becoming computer on wheels, and when you manage the software yourself, when the software is already top notch, when you are training that computer in a certain way, which in this case they've been training it through the car's vision, it made a lot of sense to go into the humanoid robots. And I think, I mean, I would sound crazy by saying that the software is not the biggest issue to solve here, but I think hardware was a very, very big issue for them, making hands, fingers, making very human-like. Because before, I mean, we've seen Boston Dynamics. Okay, cute. You can dance, you can jump, but that's not really useful for the majority of the people around the world. But yeah, Dojo is definitely going to be. I mean, if it works out, Elon Musk himself said it can be $100 billion a business. But again, that's if it works out, and the timeline is the Elon timeline. Could be 2 weeks, could be 2 years, who knows? But yeah, it's amazing what this company has already achieved and what it could potentially achieve in the future, despite all the haters and despite all the pressures that it faces. But sometimes he asks for it. But okay, I mean, if it delivers, I can't really complain. So last thing here, if someone has a question, now is the time to write it in the chat. If not, we're going to conclude this live stream. I will add some timestamps in the description for those that will watch it afterwards. Jose, do you watch the NFL?
No, I do not, Neil. I mean, most of the time I'm either doing content stuff or, like I mentioned earlier, I just got blessed with a baby boy, so that's where most of my time goes.
So everyone that's not in the football world, go make some babies. Voila, that's the that's the big message here. So yeah, anyways, thank you very much for coming on the channel. Thank you for enlightening us and teaching us about the semiconductor industry. For those that don't know, Jose has his own channel. He's also contributing to the Motley Fool. His link is in the chat and in the description below. So I highly suggest you go follow him. He just reached 30,000 subscribers as well. So big congrats.
Thank you.
This year, let's go for a 40 and more. So again, thank you very much for joining. Thank you all for listening in, and I'll see you all in the next one.
Thanks for the invite, Couch.
My pleasure.